What if you have all the tools and techniques locked down in trading but still seem to not achieve consistent profitability? That's probably because the biggest battle in trading is not the charts, it's actually the battle with your own psychology. In this video, I'll break down the introduction to psychology and trading and how important it is to be aware of a few key factors when it comes to psychology and trading. So stick around and enjoy the video. So now let's have a look at trading psychology. Trading psychology refers to the mental and emotional aspects of trading that influence decision making, discipline, and overall performance. Because let me tell you, unfortunately, we as humans are not robots, and there is going to be emotions involved, especially in the beginning phases of your trading journey. So your mindset and emotions can either support or sabotage your trading efforts, so often making the difference between success and failure. It includes emotions like fear, greed, and also overconfidence, as well as cognitive biases and discipline. So why is psychology in trading so crucial? Emotional control is very important when it comes to making decisions in trading. Emotions like fear and greed can lead to impulsive decisions such as exiting trades too early or chasing losses. So let's just say, for example, we've been trading the Nasdaq and unfortunately we have taken 3 losses in a row. That might lead you to taking very risky trades, aiming for targets that might not be reached just because you want to make back your losses. So here, for example, that might lead you to taking a trade here, aiming for new highs, although the market is clearly in contracting price action. You should never let your previous outcomes of a trade affect the next trade you are taking. So whenever we take a trade, we should have a clear mindset and forget about the trades that we've taken previously. That also applies to greed. So let's just say, for example, it's been an amazing day. I have taken a long trade here, that one played out. I've longed this, another win, then this, another win. And that might lead to me thinking, all right, today I'm on such an incredible winning streak. I'm just going to use a larger position size, trying to aim for the next trade. This is the next trade I'm going to win. But that actually is the one trade that turns against me and is wiping out all of the profits that I've made previously. So this is something we have to be aware of, that our psychology can play tricks on ourselves when it comes to trading, and this is why risk management has to be applied so we can avoid that from happening. So we have to maintain discipline. That helps us to stick to our strategies and avoid deviating from our trading plan, especially during challenging times. Because in trading, we will face challenges. Trading is a journey, it's a marathon, it's not a sprint. So there will be periods of taking losses, and that might challenge us psychologically. We have to maintain discipline and develop strategies that can help us overcome these difficult times. We also have to understand confidence versus overconfidence. So whenever we take a trade, we have to be confident enough to actually pull the trigger and take the trade. But overconfidence can lead to excessive risk taking and ignoring potential pitfalls. And common pitfalls traders face in psychology is the fear of loss. So the fear of losing money can cause traders to hesitate or exit trades prematurely, missing out on potential gains. So say, for example, you've taken a few losses over the day. Now you're in your next trade and you see your trade is turning in your favored direction. So say, for example, you did take a long trade down here and the target for this trade is a new high. But because you are mentally already affected by the losses you have taken, you're closing the trade up here. So you're missing out on potential profits because your psychology is getting into the way and you are closing the trades too early. So this is why we have to assess that regularly and also keep the psychology in check and actively work on that, because this is something every trader is going to experience. Besides that, greed. So the desire for bigger profits can lead to over trading. That is what I already explained here. But that is also the fact, if we have taken some good trades, we should close the trades at a predefined target. Say, for example, you're in a trade that's already up $1,000 in profit and you say, all right, I'm up 1,000, but I can maybe even make 2,000. But that is where fear is getting into the way, and this is where you should close the trade and stick to the trading plan that you have created in the morning according to the daily plans. And here, this is why I said in the daily plan video already, it is important to stick to your trading plan. So follow predefined trading plans to avoid emotional decision making during trading. Use mindful techniques. This is something I really like to do. So practice mindfulness to stay calm and focused. I like to do meditation, I like to do breath work, and I like to visualize my trades before I take them. Also, what can help you with your trading psychology is keep a trading journal, which I already said, but you can also include a psychology section into your trading journey and track your psychology or how you felt during a trade. So say, for example, you're in a trade somewhere here on the Nasdaq and you experience the feeling of greed or fear. This is something I want to analyze and try to understand why it was happening. What was the reason behind this? So this is how I can work on improving that. I need to find out why something is happening, and then I can improve it going forward. One thing which is very important in trading is also accept losses. So we have to understand that losses are a natural part of trading, and we have to focus on long-term success rather than short-term outcome. We want to look at trading in terms of small steps. We want to take small steps in the right direction as opposed to having that one trade that is going to make up for all the losses we ever take. Right? A P&L is always going to look a little bit like this. We want to have a positive P&L, but there's going to be losing days, and that's always better than having that one massive green day, but then we lose it all on the next day. So now let's have a look at how we can build resilience in trading. We want to develop mental toughness. We need to handle stress, and therefore we need to learn to manage stress through techniques like meditation, exercise, or deep breathing exercises, which can maintain emotional balance. This is something that is very close to my heart because that is something I do every day. Besides that, we have to learn from mistakes. That is why it's so important to keep a trading journal, and we have to view losses and mistakes as learning opportunities rather than failures. We can adjust our strategies after accepting and understanding the losses, but it's not a failure, so every loss is a lesson. And we have to stay patient. So once again, trading is a marathon, not a sprint, and we have to cultivate practice to wait for the right opportunities rather than forcing trades. One thing that really helped me over the long term is maintaining a growth mindset. So that means focus on continuous improvement and learning rather than perfection. So I know that for myself as a trader, I'm constantly improving. I can't achieve the one level where I'm done with trading, I've mastered trading. There's always going to be something I can improve on. There's always something going to be that I can learn, which is new. Okay, so to summarize, trading psychology is as important as technical analysis and your strategy. By mastering your emotions and maintaining discipline, you can significantly improve your trading performance. So I hope this video was already helpful to you and on how to improve your psychology in trading. If you are curious to learn more about psychology and trading, we have an entire course on our website about psychology and trading. So as you know, I'll be delivering 2 beginner videos like this every week, so stick around and see you in the next videos. Goodbye.